Imagine once calling an entire country uninvestable, only to bet billions on it decades later. That's exactly what legendary investor Warren Buffett has done with Japan. Buffett, famous as the Sage of Omaha for his success with American companies, shocked the financial world by investing heavily in 5 Japanese corporations and reaping an enormous payoff. In today's video, we'll explore why Buffett changed his tune on Japan and dive into his $23.5 billion investment in 5 Japanese trading houses. We'll break down Buffett's rationale from dirt-cheap valuations and rich cash flows to parallels with his own Berkshire Hathaway, improved corporate governance, and even a clever use of low-interest Japanese debt. We'll also touch on a bit of history, check in on how this bet is performing, and discuss what it all means for investors worldwide and for corporate Japan itself. Let's rewind to 1998. Japan was in its lost decade, a period of economic stagnation and deflation. A younger Warren Buffett stood before a classroom in Florida and essentially dismissed Japan as an investment target. He noted you could borrow money in Japan for virtually nothing, 10 years at just 1%. Yet he still couldn't find attractive opportunities there. Japanese companies were earning very low returns on equity, making the math unappealing, despite rock-bottom interest rates. "So far, I haven't found anything," Buffett admitted back then, effectively labeling Japan a no-go zone for his investment dollars. Fast forward to the late 2010s, and something changed. By 2019, Buffett had quietly begun building positions in a group of iconic Japanese companies, a move the world wouldn't learn about until a year later. On his 90th birthday in August 2020, Buffett revealed that Berkshire Hathaway had acquired roughly 5% stakes in 5 major Japanese trading houses. The news stunned many. This was a dramatic about-face from the man who once shunned Japanese stocks. Buffett's Japan investment centers on 5 giant companies known as Sogo Shosha, or general trading houses. These are Itochu Corporation, Marubeni Corporation, Mitsubishi Corporation, Mitsui & Company, and Sumitomo Corporation. Together, these companies are industrial powerhouses that touch virtually every sector: commodities, shipping, energy, retail, technology, and food. Buffett noted that each of these enterprises owns interests in a vast array of businesses, many based in Japan but others around the world. If that sounds a bit like Berkshire Hathaway, that's no coincidence. Buffett himself said they are really so much similar to Berkshire in their diversification. When Buffett first bought in around 2019-2020, he started with roughly a 5% ownership in each. Since then, Berkshire has increased those stakes to over 8% and secured agreements allowing him to go up to 9.9%. By the end of 2024, Berkshire's total holdings in these 5 firms were valued at about $23.5 billion, compared to about $13.8 billion spent, an unrealized gain of nearly $10 billion. Buffett has said he expects to hold these positions for decades, possibly 50 years or more. First, undervaluation. Buffett is a value investor and these trading companies look cheap. He said he was amazed at the low prices of their stocks compared to their earnings and assets. Second, strong cash flows and dividends. These companies generate steady profits, enabling them to pay healthy dividends and repurchase shares. Berkshire expects to collect about $812 million in dividends in 2025 from these stocks, far exceeding the cost of financing the investment. Third, their structure is similar to Berkshire diversified conglomerates with multiple ways to make money. Buffett understood and trusted this model. Fourth, improved governance and shareholder focus. Japan has reformed corporate governance, encouraging higher returns on equity, better capital allocation, and more shareholder rewards. The trading houses have embraced dividends, buybacks, and prudent management traits Buffett values. Finally, yen-denominated financing. Buffett borrowed in Japan's currency at ultra-low rates to fund the purchases, which hedges currency risk and creates a carry trade advantage. The dividends alone cover the interest costs many times over. Since Berkshire's purchases, the trading house's stock prices have surged. By the end of 2024, the stake was worth about $23.5 billion versus $13.8 billion spent, a $10 billion gain on paper, plus hundreds of millions in annual dividends. When Buffett signaled he might hold these stocks for 50 years, their shares jumped again. Japan's broader market has rallied too, with the Nikkei 225 hitting its highest levels in 33 years. Buffett's endorsement has inspired both global and Japanese retail investors to buy in. Buffett's success in Japan challenges old skepticism about its markets. His move has encouraged other international investors to re-evaluate Japanese stocks. Low valuations, improving returns and shareholder-friendly policies could present significant opportunities. For retail investors, it's a lesson in contrarian thinking and patience. Markets can change, and yesterday's laggard can be tomorrow's leader. Another takeaway is the importance of currency strategy in overseas investments. Buffett's yen loans hedged his currency risk while boosting returns. Buffett's investment validates Japan's corporate reforms and shows that global investors will respond to better governance and returns. It may inspire more Japanese companies to adopt shareholder-friendly practices. Buffett's approach, supportive rather than activist, aligns with Japanese corporate culture, building trust and partnership. This could lead to collaborations between Berkshire and the trading houses on major projects in the future. Warren Buffett's journey with Japan is a remarkable tale of conviction and adaptability. A country he once passed over has become home to one of his most intriguing investments. The result so far is about $10 billion in paper profits, steady dividends, and renewed global interest in Japanese equities. For investors, the lessons are clear. Keep an open mind, focus on fundamentals, and think creatively about strategy. Buffett's big bet on Japan bridges two economic powerhouses and shines a light on Japan's corporate renaissance. In 1998, Buffett said, "So far, I haven't found anything in Japan." In 2025, he's found something big, and he's all in.